Alrighty guys, welcome back to another video. Today I just want to go over how I use Polarity ATI in these current market conditions. So, fully transparent, I haven't been using Polarity ATI too much, okay? Reason for that is I like trading on my own a little bit more, and I like using our automated NQ bot now for NQ trades. So I don't use Polarity ATI too much, but when I do, this is what I do, okay? So let me clear the chart here and go over kind of what I like to do. So first thing is also I haven't tested the machine learning. I'm going to be doing that soon. So I'll make another video on machine learning. But okay, so what I like to do is play regression in fair value gaps. Okay, so I don't like to keep it armed 24/7. A lot of times you'll see Connor keep it armed 24/7. I don't like to do that. Okay. Reason is you get a lot of false entries. So just an example of what I like to do for the morning. So on a 1 minute time frame is what I usually do for NQ. Okay, so I spot fair value gap. So we have a 1 minute fair value gap here. If you do not know what a fair value gap is, it is basically a 3 candle imbalance with the first candle's wick and the third candle's wick having a gap in between. Right? There's no wick in between here, so there's a little gap. Same thing with bearish. It'd be right here. Just for an example, from the first candle's wick to the third candle's wick, there's a big displacement candle down. Okay, but anyway, we have a bullish fair value gap here. We pull back into this. Okay, and what I'd be watching is basically a regression short trade. Okay, you need to tweak your settings to make sure your minimum imbalance volume isn't too high for these kind of trades, stuff like that. But regression short here to make sure you get into a long trade out of this gap. Okay, obviously it depends on your ATM settings, what you want to use. Generally in the morning you'd want it a little wider. Okay, but point being, you can catch a regression short winner out of here. We dip in, hopefully some sellers come in, we bounce back out. Okay, another example right here, we have a bearish fair value gap. Okay, we pull into it. Okay, once we see that we are holding it, so anywhere maybe after this candle, you could arm right away. You just, depending on your stop, it could get hit. But you'd arm regression long in this gap, expecting a pullback down, which we do get. Just depended on where you actually decided to click regression long and arm it, or your ATM strategy, right? But we did pull back quite a bit from that as well. Okay. And then right here, we have another really nice gap. This is a bullish gap, okay? What I like to look for here, again, regression short trades. So we can look for a regression short as soon as we dip into the gap, hopefully get a fill, right? Again, depending on your stop, your fill, your ATM, all that. Look at that. Nice rally right out of there. You could set something like a trailing stop loss with no PT. Okay, so as soon as it starts to move your direction, that stop loss just trails, so hopefully you can catch a bigger move. Or, do whatever you'd like, really. But point being, I like to selectively arm regression short or regression long in the zones. So a bullish zone, like this one, I'd be looking to arm regression short to hopefully get a short imbalance, sell imbalance down here, where you pop back out. Okay. And this happens all the time. You can use any time frame for this, okay? Generally, though, with polarity scalping, I'd recommend 1 minute to 2 minute fair value gaps if you're looking for really quick scalps, okay? We have another fair value gap here, which we never pulled into, right? You need to be aware as a regular trader, too. Like, you can see we're sweeping the highs. We're starting to get a lot of selling pressure coming in, so you're probably going to want to not take this gap, right? Up here at these highs, we do end up dipping into the gap, holding it again, right? So a lot of different ways you can play these. We have bearish gaps here, but again, as we're climbing back up to this, you might want to wait and see how the candle reacts a little bit first before just straight up arming, because you could catch a loss there, right? Here we have a bearish gap. We touch it. Look at this perfect entry. This happens a lot actually with these gaps. We move into it by like a tick. Okay, you see that right there? arm regression long, hopefully get a entry somewhere right here, right? And then we pull back. Okay, this just happens all day. Right here, bearish gap. The way bearish gaps work as well, or regular fair value gaps work, is it's okay if the candles wick above or below, but as soon as the body closes above, then that is when bad things can happen. Okay, when the body closes above, the gap is invalid. Okay, right here though, you can be looking regression long, hopefully get a fill here, dip down, pull back up, regression long, dip down, right? Just do this all the time throughout the morning. Okay. So I just want to make that quick video explaining that is how I've been using Polarity ATI. And again, I haven't been using it too much because I've mainly been using our own automated NQ algo, which has been working very well, fully automated. But yeah, that's how I would use Polarity ATI. That's how I would recommend it. And again, I'm going to be looking into the machine learning stuff, hopefully updating the Polarity course here pretty soon as well. So hope you guys enjoyed. Comment any questions or concerns down below, and I'll see you later.